I do think that being in Vegas and in this environment's definitely helped me from a trading and a market standpoint in that, obviously, really the trading comes down to the bottom line is put the odds in your favor. You don't want to, you're probably not going to want to buy over bought markets, and you're not going to want to sell over sold markets because the odds favor a bounce. You don't want to be behind the eight ball. And we do a lot of option selling with our clients, and really it just comes down to, as an option seller, more options than not expire worthless. And so right off the bat, the odds are in our favor, and we try to play to that. Obviously, there's no guarantees, and we don't have a crystal ball, but we know approximately 7 or 8 out of 10 options are going to expire worthless. So as a seller, it's almost like being a casino. People put $1.25 in a video poker machine, and I think a royal flush is maybe 1 out of 40,000 hands. I might be a little off on that, but the odds are really horrible for a royal flush. Casino knows they're going to collect $1.25 most of the time. They're going to pay out a jackpot here or there, but in the long run, they're going to come out ahead, most likely.
So, you're jumping right into option selling, which is a big favorite of mine, but it's not something that the uninitiated obviously want to jump into, and I'm sure you tell your customers the same thing. So I agree with you on overbought, oversold. You want to sell puts when they're oversold. You want to sell calls when they're overbought. So talk about this. One of the things about your book is you really lay out nice and simply, some of the chapters: crash course on commodities, hedging versus speculation, organized chaos of open outcry, and I found this chapter very interesting. I'd like to come back to that, and so on. You've got choosing a brokerage firm and what you should look for. 6 years, obviously, of being in this business is probably what led you to this book. So walk me through the process of putting this together, because you did a fantastic job, and there's really nothing out there in the marketplace that addresses the need and the niche that you laid out here very nicely.
Right. Thank you. And I agree. This book was written when I first got into the business 6 years ago. I did the same thing. I went to Barnes and Noble or any other bookstore and was looking for beginning commodity books. And what I found was useful information, but nothing that really could help somebody starting from scratch answer the simple questions. The questions that I get every day from new traders. How do I know what kind of service I need from a broker? Should I trade online? Do I really need a broker? Is it worth the money? Those types of things nobody really addresses, and a lot of beginning traders really don't put enough thought into them. I mean, they spend hours and years studying the markets, but they don't study these decisions that will actually lead to your success or failure. So I tried to put all the questions that I've ever gotten and kind of compile them into a single book.
And you really get into the things that I think are important. You talk about margin, leverage. You talk about rollovers when it comes to options expiration and futures expiration, commodities, understanding the nominal rates of the vehicle that you're trading, how they trade, what the hours are. There's different hours for coffee versus S&P futures, the liquidity of these issues. So what do you think, as you said, when somebody is looking to, what are your bases for somebody that's new to this side of the business, the options, the futures, the commodities? What do you absolutely want to make sure that the person knows, the first few things before they even get into it? How do you lay that scenario out for them?
I would say first and foremost is know the product that you're trading. Know what the market hours are, and this is really hard in commodities. There used to be 4 different exchanges. Now they've kind of merged, and there's basically 2 major players now: the CME Group and the ICE exchange. But at the same time, all the products are still different. Some products only trade during the day. Some trade almost 24 hours, but they're in 2 different sessions. And if you don't know, for example, if you place a stop order during the day session and you don't realize that once the official day session ends, your stop order is no longer working, yet the markets are moving, you don't have your protection in when you think you do. I mean, so little things like that can cause extremely expensive mistakes.
Lessons, yeah. And so, again, you need to understand the difference between, as you said, a day order and a good till canceled order. I mean, really on these commodities and futures, you don't have as much. You have much less gap time because the markets are more fluid. They're open much, with the exception of very short periods of time. they're pretty much open in many cases 24/7. So you've really got to, as you said, but yet they have these contained market hours, and if your order isn't good to cancel, something as simple as that can really make a mess of your financial situation. So.
Right.